Angie, welcome back to Face. How are you?
I'm good. How are you doing?
Okay, so we've had some major moves with the Fed and the markets and risk coming back. When are we going to get some action in the grains? And what are you thinking?
Oh, I mean, I think there's got to be a fundamental catalyst that we're going to need to see happen here that's going to kind of provide us this ability to break out of the range, I think. And there's a few things that could come from that. I mean, most of what we're watching right now kind of hinges on two separate things, which is South American weather. We need to know what we're going to see when it comes to Brazilian and Argentina production specifically. Their weather will definitely influence everything that happens there. And then, how strong is China's demand going to be? We've seen them be relatively strong when it comes to soybean imports over the last year. I've seen them, near a record amount of soybean imports here over the last year. And so the question is, does that continue? Or did they do some restocking, and what does that mean for US demand as a whole?
Okay, so definitely, is there any kind of seasonal pattern as we go into winter that we should be aware of? Looks like, the beans are acting the best, trying to dig their heels in. Corn, I think, just made new lows,
Mm-hmm.
and wheat
Close
is
to it,
not
yeah.
making, yeah, not quite making new lows. So you would think there's at least a bear market rally in these. Perhaps a weaker dollar will end up supporting the grains. You think that the strong dollar has been part of the problem
Yeah, I
of the
think, the
prices?
strong dollar limits our ability to compete globally. And so what we've seen is just a really slow start to exports as a whole. We've seen soybean exports slower than what you would like to see. There, the USDA has already anticipated that, soybean exports on the year are going to be in line with where we were at during the trade war. They're going to be incredibly low compared to what we've been used to the last few years. So there are our bar is already low, and we're kind of underperforming that still. Now we have seen a pretty substantial pickup in export business, mostly the Chicago, the soft red winter variety. China had some pretty major problems with rainfall, heavy rainfall ahead of harvest there, and it damaged a significant amount of their wheat. And so we're really kind of watching to see what that looks like. So wheat exports have picked up significantly. Corn exports, we've seen really strong demand from Mexico, which has been interesting because Mexico has been in the headlines or of conversation simply because of their stance on non-GMO, and the U.S. kind of arguing with them about what they're going to do from an import standpoint when it comes to non-GMO corn. So we need to see what would be our traditional world buyers outside of Mexico come into corn, and like I said, a few other things. Like the problem right now is we're just kind of here, and nothing is really indicating that we're going to be well outside the range currently, at least,
Yeah,
of what is anticipated. And so that just keeps us, I call it, violently range bound in grains. And so I think what we're seeing really currently right now is a lot of folks are just setting themselves up to buy on our dips, and then they sell when we reach some of these resistance levels. And we just haven't been able to have this follow through. Like you saw corn trade up above $5, for a day. December corn, we have a gap at 524 on the chart, and we still just couldn't muster strength much beyond 510. And now we're back 2 weeks later to 473 on the board, and testing the lows. And so
yeah.
we just really right now there's a lot of things that could develop and turn into bullish stories. But if they don't, if Brazil produces a crop that's in line with current expectations, and China demand really just kind of remains lukewarm when it comes to US products, grains don't really have a story. Unfortunately, we
Yeah.
just are kind of here right now.
So do people hedge at these levels, Angie, or they lift their hedges?
Farmers, for the most part, right now, we're not actively doing much. Soybean harvest is continuing. And so some folks are kind of out producing what they had anticipated to produce. And so that's helpful, when it comes to making additional sales and things of that nature. We've been just kind of cognizant of what the range has been. So we were aggressive, with adding additional hedges in if we felt we were undersold, around that 510, 515 on the March board in corn. We have targets to see if we can get back up around that 1330 level in beans. And so no one's really aggressively selling this level as a farmer unless they, need to turn the bushels into cash or have an overabundance of production that they weren't necessarily anticipating.
How about on the meat side of the equation? What's been going on? I haven't looked at live cattle, hogs, bellies, any of that in years. I took a glance, I don't know, a few months ago, and the prices I remember and the prices that we have now. I know what I
Very
pay
different
for a
things.
ribeye steak at the store. It's a lot. So what's been happening with the meats?
Yeah, we've just seen, in times of higher input costs when it comes to fattening cattle and just feeding livestock in general, you tend to see a bit of a contraction in herd size. It costs more, margins are squeezed, there's more risk associated with kind of feeding these animals. And so you've really seen that happen when it comes to beef cattle across the US over the last couple of years. We've seen basically the beef herd shrink to its smallest level and several decades. I think it's almost 40 years, maybe more than that. Someone can yell at me that's an expert in the livestock side of things. But when it comes down to it, we've seen our supply kind of continue to shrink. And from an overall standpoint, the question now becomes, what happens with demand? Does the consumer really start to cut back when you're looking at $7, $8 a pound ground beef? What does that mean when it comes to the biggest demand sector for beef, which is fast food, hamburger and things of that nature? Do we see more in the way of cattle being brought in, imports of different cuts of beef, things of that nature? So from an economic standpoint, we kind of don't have a reason to sell off in fat cattle, simply because we just don't have a lot of them, and we really haven't seen any major signs of a significant reduction in demand.
Yeah.
And so the market's job is going to be to try to encourage an increase in production because we're going to need it, obviously, or kind of try to get that consumer to change their preferences, which is part of why you've seen chicken, poultry prices rally and things of that nature, because the consumer has transitioned, but it's difficult to be nimble in the livestock sector.
Look at this low was right around a lot of lows during COVID
Mhm.
and never looked back. See, these are the prices I remember, Angie.
Yeah. Yeah.
Okay, I mean, so we're talking about a triple
Hmm.
from
Yeah.
where we used to be historically. Pretty amazing.
What's most
Uh,
amazing is the experts in the business are still bullish. You know what I mean? And so I'm not going
yeah,
to call myself an expert. I kind of watch livestock out of the corner of my eye because it's an important demand sector and it has an influence on farmer profitability as a whole. But the experts are still very bullish fat cattle. And so I just sit and kind of watch astounded, simply because we are
yeah,
in such rare air.
yeah. So I believe there was some avian flu just in time for Thanksgiving. So
Yeah.
people pay up for turkeys.
They said that turkeys are cheaper this year. So I'll be waiting to see if that is true
Uh,
or not. That was a headline on the news the other day. But that's
really?
avian flu is quite seasonal, and I think the fall outbreak has been a lot lower than what we had seen in the spring. So at least we have that
Oh,
going for us.
I just heard there was going to be some major culling of the turkeys
Yeah.
in time for Thanksgiving.
Well,
Okay,
that's
so I love turkey.
me too. I'm looking forward to it
Anyways,
right now.
anyway, the L tryptophan. So, what else are you doing? Anything new business side for you, Angie? Or are you looking for people that may be interested? They're not farmers, but they trade everything. It doesn't matter what the symbol is, as long as there's a chart. Would you like people to follow you, come to your website?
Yeah, yeah. You can check out our website at consisag.net. And so that's changed a bit here. My husband Carl joined me the 1st of October. And so my husband and I, between the two of us, we have almost 50 years of experience. So I won't embarrass him by saying that he has 10 years. Oh, I just said it. He has 10 years more than me. But we
Yeah,
both met, we both have a in-depth background in risk management on the commercial side and when it comes to working with farmers. But in addition to that, we also, really pay attention to what's going on in the world market. And so this market structure is very different than what you've seen over the last couple of years. I think there's been a lot of people that have been somewhat, I'm going to call them commodity tourists. because of the inflation conversation and some of these other
Yeah.
things. And so it's easy to get sucked into a market narrative potentially that could be false or could, you know, not be supported by the underlying fundamentals. Because one of the things that is great about grains and oil seeds, you know, more than really anything else, is that the cash market is the North Pole, you know, in that regard. It's such a transparent and really kind of heavily traded market around the world from a physical grain standpoint, that what is taking place in the world cash market really has a big influence on what happens when it comes to spreads and futures movement as a whole. And so one of the things that we do, like, you know, I enjoy doing especially, is working with folks outside of the industry to just kind of explain, here are the things that matter, here are the seasonals, here are the situations that could influence price direction, you know, and here's what you want to be watching, because these are the underlying, you know, bubbles that'll turn into a market story later on. And so, yeah, our
Okay.
website, and we're pretty flexible when it comes to consulting relationships on what that looks like. But we also put out a decent amount of commentary each day and a weekly overview and some of these other things that we find are very valuable.
Do you find that FX movements in USD yuan affect China's behavior in the grain markets? Do you
I
follow it?
think so. I think the Brazilian currency can influence it more than what we see happen with the dollar and the Chinese yuan, but it definitely has an influence because it reduces or influences their buying power or makes them want to look in a different direction. You know, we've seen it here with currency conversion happenings where you know, Brazilian farmers are getting more for their product, even though on the global market they're selling it cheaper. And so there's a lot of influence there that we have to watch on a day-to-day basis that can kind of impact grain movement on the whole.
Okay, so Brazil, um, Argentina, you don't even know what kind of currency they're going to have there.
Right.
And
Argentina, their own, they have an export program right now that they've been working on. One of the things that we are watching though in Argentina, now that you brought it up, you know, is the outsider that is coming in that a lot of folks thought was going to win in the last election primary. He's pushing to, you know, really kind of return to a dollar peg in their currency. And that could have some huge farmers in the country, because currently right now they keep their grain and soybeans as a hedge against inflation, because they turn that into dollars when they sell it. And so if we were to see that sort of hedge against inflation removed, you would probably see a pretty sharp transition in world cash market trades, you know, because the Argentina
okay,
farmer would completely different approach. So we'll be holding our breath for a couple of weeks to see who kind of pulls that election out. And, you know, it's kind of a coin toss, but it will be interesting because it could have some pretty major implications. You know, Brazil, if you look at South America, Brazil has grown exponentially when it comes to their agriculture sector, while
yeah,
Argentina's actually contracted, and both are pretty capable. And so it's just economic conditions that have had that influence. And so we'll definitely be watching the election here to see what that means for their economy and their farmers going forward.
yeah. I have this, Brazilian currency against the yen and against the yuan, and Brazil's been outperforming for a
Mm-hmm.
while. Tavi Costa was, I had these up for him because he uh, is very bullish Brazil.
Yeah.
Um, okay, so how about what's going on with um politics? Anything happening that we have to be keeping an eye on? USDA, could programs be cut? Um, is that are we going to still continue to use corn for ethanol? There seems to be plenty of it around, so it's not as much of an issue. If we are in a bull market in corn, it becomes more of an issue. Anything on the um, biofuel side
Mm-hmm.
that
Yeah.
you're paying attention to?
Yeah, we're just watching. I mean, we obviously have seen pretty substantial growth in the biofuel sector, specifically biodiesel and renewable diesel. So we've seen these major crush projects kind of kick in, and so that's been helpful. I talk a lot about poor exports and, you know, kind of dismal sales when it comes to China and some of these other folks, but we're transitioning here in the US to a domestic user of beans. And so previously, we were about half and half. We would crush half the crop and turn it into soybean oil and soybean meal and use those products. And we would export the other half for other countries to do the same. With the kind of intro of renewable diesel and biodiesel and some of these other subsidies that we've seen, there's been a pretty substantial increase in domestic crush. And you've seen the oil market, soybean oil market get really volatile. We're seeing soybean meal get really volatile. Some of that has to do with Argentina, but the change in market structure is big and it's quick and it's noticeable. In addition, we had yesterday the major airline groups through their support behind SAF, sustainable airline fuel, using ethanol. And so prior, in the Inflation Reduction Act, one of the things that was disappointing to the ethanol camp was that SAF, the math that they used to determine whether or not it was kind of one of those carbon neutral sort of fuel supplies, that left ethanol out. The program or the whatever they call it, the formula that they're using,
Okay.
it just doesn't count ethanol as a carbon neutral crop. And this isn't an opinion. I am not a scientist, but we did see Delta and others kind of throw their support behind a different formula that would allow ethanol to be used. And so that could be big. One of the things that we have heard about over the last few years in ethanol is that you're going to see demand continue to fall off because of, reductions in gasoline demand due to EVs and some of these other things. And so if we can kind of provide a secondary market structure for this ethanol that we have, not only does that kind of help continue to support the production that we have in place, but it also can kind of incentivize some infrastructure gains. So that'll be something we're watching. It's in the hands of the Treasury Department now. So Janet Yellen, I guess, makes that decision, which is interesting in and of itself. And we'll know that more in December.
Of course, throughout all industries, lower interest rates would help. How will it affect the agricultural industry if we're seeing a peak in interest rates?
If we see a peak, I think it's not necessarily where we peak, it's how long we see sustained levels as high as what they are. I think that really kind of matters. And so one of the things that we're seeing is that it costs more to hold bushels. I think that's part of the reason that you're seeing a slowdown in world demand as a whole. You're not going to be in a huge hurry to go out and buy as much product as you possibly can when you're looking at holding a bushel of corn costing you, 7 to 9 cents. Bushel of wheat's 9 to 12 cents, give or take, and beans are almost 20 cents a bushel per month just on interest costs alone.
Wow.
And so you're seeing the world pipeline, the world demand for one stay a little hesitant or at least a little bit slower because it costs so much more, not only to own supplies, but to hold them. But in addition to that, you're also going to see folks who have supplies on hand be a more willing seller in this market structure, just because, like I said, it costs so much more to hold it. The value of having cash in hand is almost greater than the value of trying to guess what happens next in the market. And so I think there's going to be a lot of different things that kind of happen as a result, and back to your political conversation, when it comes to growth and domestic demand, a lot of that's going to be hinging now on subsidies and tax credits and things of that nature, because you're going to have to kind of increase the incentive in investing in infrastructure when it costs so much more to do so. And so there's going to be some pretty big factor. I mean, it's going to probably slow down equipment purchases. You're going to see, other transactions be impacted. The value of cash starts to change. So do you see, a slowdown in some of these gains in land values that you've seen at auctions? Do we see a departure from some of these investment groups that have been buying a lot of this land? There's certain things that could really influence the picture in agriculture overall, very long term, but a lot of that just depends on how long rates remain elevated, more so than how high they hit. How quickly we roll back will probably have a greater influence than anything else.
Okay, so again, rates play a big part of everything in every industry, the cost of money. So that's real interesting, the carrying charges, decentivizing people from holding
Yeah,
positions.
and that
Yeah, that may
influences
be part
too.
of the problem. So maybe,
It is. Well,
right?
that's
So go ahead.
Oh, that's what I was going to say from a money flow standpoint. You know what I mean? Like it's hard to get
Yeah,
speculators to come in and buy a front month that's 25 cents less than the Jan. You know what I like now? Nov Jan's rolling off here pretty soon. You look at the soybean spreads, but to see November to January carry at the widest level in over 23 years, that says a lot. And it kind of
yeah,
discourages, active speculative participation unless you're just going to kind of get in and get out, which a lot of the speculators that are traditional participants in the ag markets tend to get in and just kind of hang out for a while. And so that's the other thing. That's part of the reason why you're seeing, in the commitment of traders reports, the
yeah.
outside traders are, short in wheat, short in corn, and sitting, close to short in soybeans or at some of their lowest length in since the spring. And so there's a lot of things that are happening there that influence and yeah, so you've got to pay more to hold bushels and the market structure is showing that as well.
Okay, well, I encourage people to follow this story. You saw what happened to beef prices. One day that's going to happen to grain prices. So pay attention, and Angie would be a great resource for people interested in the fundamentals of what's happening in the grain complex. So Angie, I want to thank you again for coming in here and updating us about what you're seeing from your standpoint in the middle of farmland and
Thank
what
you for having
state.
me.
Yeah.
I always love
Um,
coming on to talk.
oh, okay. Well, great to have you and appreciate your giving spirit of giving your time to talk about these things. There aren't a lot of people with coverage on the grains. I think they're important. You can't eat gold.
That is true. You can
All
try,
right.
but it'll hurt.
All right. Well, your friends that were worried about the dollar when it was, actually in good shape, and we had that huge dollar rally. Now might be a time for dollar hedges. There's a
I
dollar.
will. We'll
Let
have
them
to.
out.
We'll have to have you come back on and talk to them too in that group one of these days.
Okay. So thank you, Angie. I mean, have a great holiday season, and we'll speak in the winter when you're going to be needing. How do you heat your house? Natural gas or
Propane.
propane? Okay.
Yep.
So you could be assured prices are going to be heading up on everything,
That's
natural
what I
gas,
figured.
everything. Thanks again, Angie Setzer, everybody. Follow her on Twitter at Goddess of Grains. And here's her website, Kansas, yeah, it's a kansasag.net. And you could just, enter your name and be up to date with what's happening in the agricultural sector. Thank you, Angie.
Thank you. Have a good day.
All right, adios. And that's a wrap for me, everybody. Good hunting the rest of the day. See everyone for the NFP tomorrow. And don't just count your pips, count your blessings. And I'll see you guys tomorrow.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.